setup as we are seeing it. Bhaskar Laxminarayan, he's the Chief Investment Officer and Head of Investment Management Asia. Julius Baer now joins us. Bhaskar, thank you very much for joining us. Good to have you here on the program. It's the end of the year. Seasonals are positive. And then, of course, then we get into January in 2025. What's the broad roadmap? I mean, you think that one view is that maybe we kind of sort of drift higher into the end of the year, and then maybe January there's a bit of a reality check once Trump is in office. What's the sense?
Well, I don't know whether it's associated with Trump being in office, but overall, markets are priced for perfection. In terms of execution, you got to get everything right at this point in time. The earnings expectations are reasonably high. Also expectations of what they will announce on guidance is also quite high. So execution is absolutely key. And there is literally nothing. So if any misses happen in the next result season, I think you'll see a correction. So I think results is part of that exercise where you will see market consolidation one way or the other. Either it goes up to the next trajectory or we take a correction. But looks more and more likely that the next big event is down rather than up.
Down rather than up. Okay, that's an emphatic statement. Bhaskar, good to have a clear view. Always good to have a clear view, whatever the direction might be. So tell us specifically on India, do you think this holds true for the Indian market as well, more down than up? Because here there is a lot of chatter about the earnings that you spoke of. I mean, anyway, we've come off a really weak season. Q2 was not great. Then there's an overall talk of slowdown here as well. So what's the specific call on India?
I think in India, the case is because you had such a bad earnings season and you've sort of scraped through that, maybe chances are that, the next earnings is slightly better and that gives hopes to people. And then therefore, there's a little bit more of momentum in India. Having said that, again, in India, actually, the US are two different stories. In India, the large caps are actually very reasonably priced. In the US, the large caps are expensive. While it's the exact opposite when you come to the mid cap and the small cap space. It's cheap in the US, not so in India.
Hi,
so
Bhaskar.
That's going to be the tricky one to do.
Absolutely. Got that point, Bhaskar. Good morning and welcome to the show. This is Nigel on this side. I wanted to ask you about the Fed. Do you think that they can skip the rate cut in the next week itself? Today we have the big CPI print, which everyone will be looking at. But, if I look at the Fed futures, it's factoring in 100%, I mean 85, 89% that we're going to see 25 bips cut. Do you think they could skip it this time?
Technically, they could. Okay, and chances are like this, right? Our read on the markets over the coming, I would say, 4 to 6 quarters is there is a higher chance of inflation than recession. There is no sign of recession, right? So if the markets are doing well, the economy is doing well, chances are that you might get some stress in terms of pricing and therefore inflation. Why would you cut rates aggressively? So actually keeping some buffer is not a bad idea. And the 50 basis point already has proven to be a mistake in a way.
Strong opinions. I wonder if held firmly or held lightly, Bhaskar.
Held firmly.
Held firmly. Interesting. Just a quick view specifically about India as well, Bhaskar, because we find ourselves in a tricky spot, right? Growth has slowed down and inflation is sticky, largely because of supply side reasons.
Yes.
But it is what it is. So where does that leave us?
And you just said the absolute right word. It's supply side reasons. No amount of rate cuts is going to solve a supply side reason, right? So I don't think that's the answer. So in a way, RBI did the absolute right thing by not cutting this time, but relaxing the CRR. I think liquidity elements are clearly needed as the economy slows. I think you need liquidity support, which I think was provided. So I think the RBI has done spot on this part. And I think you should expect a rate cut. Maybe if there is a bigger slowdown into the first quarter of next year, maybe sometime in March.
Rate cuts in March. So, Bhaskar, just to complete that point, you said it next year is more down than up. So, on India, do you see more down? Would you allocate any more money to the equity market here?
Yes. I mean, at the margin, I think India still gets money. Okay, this is because fundamentally it's a good market. And I think you should take any kind of weakness. And should there be a correction in India on a global cycle, I think all the more reason to buy a little bit more of India. So I think Yeah, that would be the way to look at it.
Okay, all right. Very quickly, Bhaskar, before we let you go, the Chinese are making those headlines yet again. They are saying they're going to stimulate the economy. 2025 is going to be better. They've been saying that actually for the last few months. Do you think it's going to have some kind of impact finally?
Yes, I mean, you saw that obviously what happened pre the Golden Week when the market went up in a straight line. This is not going to be the same, but I think there's a lot more meat to what has been said yesterday in the press release after the Politburo meeting. So I think you'll see some follow-up action. And again, believe this, there is a big part of this market which is extreme value. There is a ton of stocks that are trading on a PE basis at half the time of the dividend yield. So there is value in this market. And therefore, but one needs to be careful. It's not a long-term thing. It's not a structural story. But I think you play into these policy, buffers that you're going to get. And therefore, it's a trading market.
All right, and people who've managed to trade in and out smartly would be pretty happy with them. But these have been very sharp moves in China.
Yes.
Bhaskar, thank you very much. Great to have you on the show today, and we hope to see more of you in 2025 as well. Thank you for joining in.
Thank you. Thank you again.
All right, with that, let's move on and tell you what's